If I could give you one piece of advice, go outside. No, seriously, we'll wait. Okay, feel better? All right, welcome back. If you've been disowned by your family since convincing your grandma to buy Bitcoin with her retirement savings, you are in the right place. Think of this as a bear market support group, packed with information on how we got here and what to do next so you can get your family to invite you back to reunions again. And maybe grandma will forgive you and bake a nice crisp apple pie with the Bitcoin logo written on it. So first off, how did we get here? Dog coins? Sure. Metaverse? Yep. Greedy VCs and investors? You know it. Macroeconomic downturns? Most certainly. Crypto is a fast-moving money flow, transferring from sector to sector at a frighteningly fast pace. This rotation from frothy dog coins to metaverse to play to earn to run to earn to everything to earn has gotten us back to the beginning. How about working at a McDonald's to earn? Let's be real, a Big Mac to paying customers is more valuable in society than shilling your Elon to the moon Inuverse tokens to your grandma at Thanksgiving. As many NFTs and altcoins are turning to dust, it is sobering times like this when we realize what crypto was founded on. So let's get back to the basics. It's time to hop into our DeLorean time machine and travel back to where it all began. Bitcoin in its current form was created after the last economic meltdown. The first Bitcoin block was dated January 9th, 2009. It even had the text, "The Times, January 3rd, 2009, Chancellor on brink of second bailout for bank," inside the first block. Blockchain technology at its core was created out of absolute necessity, a way out from trillions of dollars being printed from thin air and given to banks, hedge funds, and politicians. 21 million Bitcoin, the maximum amount that can and ever will exist. A much more sane approach to the financial system, which prints trillions of dollars for bailouts for industries that are too big to fail, while common men lost homes, livelihoods, and even families. The 2008 financial crisis, to oversimplify, involved trillions of dollars being printed, housing bubbles, and a whole market misused by leverage. Sounds eerily similar to today, huh? Since Bitcoin's creation in 2009, it hasn't been tested through a bear market, as all financial markets have been up only since then. But now as long-standing publicly traded companies like Amazon and Netflix fall as fast as obscure microcap tokens, Bitcoin and the rest of the crypto babies are really being tested. And they aren't passing the grade as you would have hoped. Unless this is golf, then the crypto world will be winning with the lowest numbers. As Bitcoin hasn't truly seen a market-wide bear market, we will see what the store of value really is made of. Whether a coin is worth $1,000 or 1/1000th of a cent, it will still work. The altcoin market depends mainly on Bitcoin and Ethereum to understand the direction of their value. And Bitcoin reminds us why it is the granddaddy of all cryptocurrencies. When Bitcoin goes up, so do the altcoins. When Bitcoin goes down, so do altcoins. And Bitcoin depends largely on the stock market, despite what those in the crypto world would like you to believe. Maybe one day, but not for now. Bitcoin has made early investors some insane profits. Those who invested under $1 to even under $1,000 would be sitting very comfortable right now. In 2020, when the entire financial market took a sudden death in March due to COVID, the crypto community thought it would be the end of this world for them too. It of course was not, and this was the point that marked the beginning of the parabolic gains for the entire crypto community. 2020 and 2021 had given the crypto community a huge boom. Trillions of dollars printed, free stimulus checks to individual people, and the majority of people at home and online brought their focus to crypto. This perfect storm showed there was money to be made, and those long-term in the crypto community knew that the time had come to cash in on their investments. Now let's talk about some of the emotional trickery. For the majority of the world, when the news channels and celebrities start talking about investments, they look at it like a good thing. Oh, remember when Katy Perry painted Bitcoin on her nails? Let's buy. CNBC is saying buy XRP, XRP to the moon. Emotions like FOMO are strong enough to make you do irrational things. And let's face it, we humans can be very irrational, although we like to think otherwise. As countless psychological studies will tell you, most purchases humans make are based on emotion. Like those who buy motorcycles they drive 3 times a year. Oh, but think about the rush of the wind, the smiles as you drive past other motorcyclists, catching a sunrise on the peak of a mountain. All not much to do with a specific motorcycle, but it really helps the sale. When we hear about someone making millions of dollars off of a $1,000 investment, we don't think, I wonder if that was a sound investment based off of the effort, research, or conviction. We start thinking about the Lambos, the houses, and slamming a milkshake down on the floor and quitting our job at McDonald's. Okay, so on to buy low, sell high. Buy fear and boredom, sell euphoria. At the very basics of the market, profits are made from buying low and selling high. For you to sell higher than you bought, you usually have to catch 2 conditions. The first is you bought the fear and boredom that comes with a flattened market. Many big names in the crypto world today bought the top of the 2017-2018 bull market and watched their net worth crash again and again. And slowly by dollar cost averaging, meaning purchasing a set of crypto at equal intervals regardless of price, through the fear and boredom of the previous bear market, they caught the 2020-2022 bull run into riches. 10x, 20x, and 100x were a reality for these people who had bought fear and boredom of the market and sold into the euphoria of the market. There's a saying in the crypto community: if you don't know who the exit liquidity is, you are the exit liquidity. Number two is you need to be able to see certain narratives before they happen and have conviction in your trades. The printing of trillions of dollars from thin air was a huge indicator for those in the financial world that stocks and crypto would see a major benefit. And in the small world of crypto, those who could see the interest in the metaverse picking up as work from home was reaching its peak profited, as Facebook changed to Meta and brought the whole attention of the world onto the metaverse. Even this metaverse narrative has fizzled out, and many metaverse coins are down bad, down 80 to 90% from their highs. Now let's move on to bias, the real threat to humanity. Bias is a real threat to making smart decisions, and humans are habitual creatures. In a multi-year bear market, we think the price will never go up, and when it does, we doubt it. And then, with the majority of people becoming bullish again, the market turns bearish again. And the same happens in a multi-year bull market. Fantasies of Lambos and houses blind us into thinking it will never go down, and when it does, we continue to buy the dip that continues dipping until we run out of faith and money. And just when we give up, the market decides to rise again. But here we are now, with many tokens down 80 to 90% or more from their highs. Granddaddy Bitcoin is down over 60% of its all-time high of 69K from November. As we previously mentioned, Bitcoin is dependent on the stock market in its current form. So when the larger financial markets make their shifts, Bitcoin has been historically the first one to take the hit. It costs billions of dollars more to move the stock market than it does to move the crypto market. So Bitcoin climbs fast in risk-on environments. It falls harder in risk-off environments. With the US Federal Reserve fully committed to combating inflation in the hopes of avoiding a recession, all markets have seen profits drain out dramatically as they move into risk-off environments. There were some reasonable voices who noticed the changing winds of crypto price direction in November, but did we listen to them? Not like we should have. As most of the crypto world was waiting for that one final blow off top, we slowly watched our gains get cut in half and then in half again, and then a few more times after that. It was a time to be in stablecoins, and we were about 80% in stable during that time, but the feeling of the 20% going down doesn't feel right. And seeing the wreckage of our fellow crypto enthusiasts is never a good sight to see, as major projects like Luna turned to dust before our eyes. VCs, who were regarded as gods during the bull market run, turned out to be more like the emperor who wears no clothes. The euphoria of the crypto market has been sucked out of the room, but how long will it last? Will we have one last push or continue stair-stepping our way closer to zero? The crypto landscape is currently in its cold shower moment, as many realize how quickly it can go towards zero. Good ideas seem like hilariously bad investments when price moves down. When the crypto community copes with memes of financial ruin, we enjoy the memes and await the next moves from the broader financial market. Now on to our top 8 recommendations for the bear market mindset. The first one is just to go outside. Simple enough. The second is to take your dog for a walk. He doesn't care whether or not you're a crypto millionaire. The third is to forget about your paper gains that your portfolio said you had at all-time highs. The fourth is great things have been created out of the frustration that comes with failure. It's really only a failure if you give up. The successful people in the space have all had their fair share of crypto horror stories. And even if you feel that crypto is not right for you right now, there are plenty of skills that can make you earn much more than waiting to press the green buy and red sell button all day. Number 5 is to take your time to reflect on what is important to you. Crypto is an incredibly exciting, fast-paced world, but the reason most come in initially is for the money. Will that money buy you more time with your family? Maybe. A trip to the mountains? Sure. But a healthy, motivated, and happy person is a resource that money can't buy. Number 6 is timing is everything. Some made millions with their timing, but most got wrecked. And there are those that worked through the bear market and were rewarded with timing that seems almost godlike in hindsight. And with time, all things heal. Number 7 is to create systems to organize your trading and life. I always say to study, study, study. Great athletes watch the great tapes of their failures and successes and learn from them. Greatness comes to those who reflect. Journaling your trades may seem boring, but recording why you made the trade and investment will help you more than you know. Studying basic trading and investment techniques like risk management, when to take profits, diversifying across different asset classes like stocks and commodities, and avoiding bias based on following critics of your favorite investments are balanced ways of earning in the long run. Gym, run, journal, or stare out the window, but find something that you can be accountable to and your life will build itself around that. And finally, opportunity is everywhere. The possibilities of crypto weren't even in our imaginations just a few years ago. There will be more narratives, more opportunities to earn, and more innovations every year. And for us at CryptoMade, we will be here continuing to provide content and insights into the crypto and tech world. So take care of yourself, capitalize on your passions, and we'll see you in the next video.